Good afternoon, all of you. I hope I'm clearly audible to all of you and my screen is clearly visible to all. So welcome once again at Bazaar Pe Charcha session. Myself, Pawan Jaiswal from TraderSmith, and today is at February. Market turned quite volatile after RBI policy. So in next almost 1 hour, 10 minutes, we are going to discuss how market is placed technically and fundamentally also a little bit, and then we will try to discuss all the major indices. Then we will try to cover maximum number of queries, stock queries asked by you people. So let's begin this session. But before starting session, a disclaimer from our side that I'm going to read for you. A registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of return to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Then there is our company name, registration number with SEBI, our office address, compliance and grievance officer, email ID, contact number, everything is given here. So let's begin this session after disclaimer discussion. So first, as usual, whenever we start this session, we try to capture the whole glimpse of market, that how market is currently placed, how our benchmark index Nifty 50 and Sensex is placed, and then how these other key indices are placed. So as you can see here, Nifty 50 and Sensex both are trending into under pressure, and last 1 week return is almost flat or flat to negative, I can say. 1 month return, almost all indices, not only Nifty 50. I think there is some error while preparing this PPT. So 1 month return is, entire 1 month return is 000. So I think there is some error. I really apologize for this error, but there may be some changes, yes. And then 3 month return, you can see in last 3 months, all the indices have given positive return. And among that, Nifty has generated almost 12% return, Sensex, and Realty was the biggest outperformer, followed by IT and Energy. Energy was the biggest performer, 42% return in last 3 months, then Realty, and followed by Pharma. So in short, I can say in last 3 months, 6 month, 12-month time frame, I can say all the indices have generated positive return. But currently, if you see Nifty 50 and Sensex benchmark index, apart is trending into under pressure. Then Bank Nifty, another major key indices, which has almost weightage of 38-39% in Nifty 50. Banking sector, that is under pressure. Financial services is in under banking and financial both actually. So in trading into under pressure, and FMCG is under pressure. Apart from that, you can see this other indices like Pharma, IT, Realty, and Energy is trending into confirmed uptrend. So I can say if I summarize, then almost 40% financial services, then FMCG, metal, and after comprising weightage of all this sectoral weightage, I can say roughly 50% market is trending into uptrend under pressure or under pressure zone, and approximately almost 50% kind of weightage of indices are trending, like which comprised of Realty, Pharma, IT, etc., is in confirmed uptrend. And now, what is under pressure and you may all are aware that we follow the unique methodology here to capture the market trend. We are not going to discuss in detail, but generally we categorize the entire market in 4 different parts. First one is Nifty, it's confirmed uptrend. Then second one is under pressure. Third one is correction, and third one is rally attempt. Fourth one is rally attempt. So let's discuss further in more detailed manner or from technical perspective. So let's move on chart only. Chart. So this is the chart, Nifty 50 chart actually, daily chart. So here, if you see, index is facing quite resistance around 22,000. This is another version of chart we can find from after switching from here from this button. Once you click over here, chart structure will automatically change from this MarketSmith chart to TraderSmith chart. So here, this Nifty 50 is trending into sideways from the last almost 4-5 weeks, I can say. Even though in between in 4-5 weeks, there was a couple of times that the index has reached at all-time high level around 22,124 and followed by 22,127. But it is facing resistance, and every time whenever it tried to cross 22,100, it fell, and there was some profit booking happened and then started falling. So I can say that the index is not able to hold about 22,000 roughly, and some facing some resistance above 22,000 kind of. If I discuss same thing in another way on this other form of chart, so more or less, if you see from here, from December 22, I can say from the last week of December, so that comes to almost 6 weeks. Index is trending into sideways only, even though in between that it has formed, it has registered all-time high couple of times. That was one first was on this 15 January, and then 3-4 days back only on 2nd February. But if I exclude that all-time high, I can say that roughly this Nifty 50 is trending in this rectangular price formation. And this, if you see the slope of this 21 days moving average, a simple moving average, so it is also flattened. So that is why I am saying from the last few weeks actually, index is trending into sideways and hovering around 21 days, but it is comfortably holding a 50 DMA. And if we see this lower bottom of lower band of this horizontal price chart, so this lower part of this price structure and as well as moving average, both are almost in the same range around 21,000. And that is why from the last almost two couple of Bazaar pe Charcha, if you remember the previous and then previous one Bazaar pe Charcha, our clear-cut opinion is that maybe index will remain traded in sideways only in the broad range of 22,000 to 21,000 plus minus 100 to 100 points. And once again, we are glad to inform you that most probably, more or less, market is trending into that range. If I talk further today that how market is placed, so same thing I would like to reiterate, but little bit more negative bias. Why more negative bias? So there is a reason, technical reason, that yes, this particular short-term upward sloping trend line. So today, after RBI policy, if you are aware that there was RBI policy today, and afterward banking stocks have started falling, and that was mainly because of RBI commentary about this charges levied by banks, and because of that, all the entire, especially private banks, all the entire private banks pockets have started falling, and because of that, Bank Nifty had dragged almost 700 points. All the heavy bet banks like ICICI Bank, HDFC Bank, Kotak Bank, IndusInd, AU Bank, everything was falling, except only PSU like SBI and all was showing some positivity. Otherwise, all the banking were in banking and this financial stocks were in downtrend. And because of that, this Bank Nifty had dragged down toward approximately 21,700 kind of level. But later in last 30 minutes, there was some recovery happened, and then it was closed around 21,750 kind of level. But this, after the considering this upward sloping trend line breakdown and then overall structure emergence, then the current news, the underperformance of Bank Nifty, after considering all these things, I can say that maybe market is ready to retest once again level of 21,000 in coming days. So 21,000 is once again the roughly strong ballpark support level in downside. Plus minus 100 point, obviously, no doubt, I'm not denying for that. So 21,000 or plus minus 100, plus minus 100 or maximum 200 points. Most probably, once again, it would be ready to retest in downside. And in upside, unless and until it will not cross that level of 21,200 kind of level, it will remain traded in sideways only. So if I talk about next couple of weeks perspective or next few trading sessions perspective, now negativity has extended further, but not that much. I can say sideways with negative bias, and range may be 21,000 to 22,000 plus minus 100 or 200 points. So this is the current scenario as per our opinion. Obviously, if things will improve or things will change, so obviously we will change our opinion also, and we will try to update you as soon as possible. But currently, this is the situation looks like that it may remain traded in sideways with little bit extended negative bias in Nifty 50. Now, apart from Nifty 50, if I talk about Bank Nifty Bank. So Nifty Bank is clearly trending into clearly underperforming Bank Nifty or Nifty Bank. It is clearly underperforming and now showing more negativity. Today there was a fall happened almost 600 points and it has reached to almost 45,000 level. So after analyzing the things, I can say that Bank Nifty there may be more fall happen in Bank Nifty. Nifty Bank. Yes. So today's, I think today's price chart is not updated in Bank Nifty, but after this, if you see this chart here, there is a ratio chart. So ratio chart is clearly deteriorating. So I can say that from the almost level of this from November 2020, May 2023. So almost from the last 8-9 months on comparative basis, excluding few weeks in between that actually, it is more or less underperforming to Nifty 50. And currently also it is underperforming. Today there is a fall happened of almost 600, 700 points and it has closed around roughly around 45,000. So maybe in my opinion, it may fall further. Suppose it will breach this black color line that is moving average line 100 DMA. And currently 100 DMA is placed around 45,200 kind of range. And I think it has already breached. Today it closed is 45,100. So on closing basis, today it has breached. And suppose tomorrow it will continue this remain traded below 45,000. So maybe next target would be Nifty, this Bank Nifty around 44,000 roughly. But once again, that is the working target for next couple of or next few trading sessions in Bank Nifty. More or less, it is trending with negative bias, little bit in downtrend, and now below 45,000, trend may deteriorate further in coming days. Maybe next target would be 44,000 and maybe below that also. So I'm expecting little bit negativity with things will not change like today the way it has fallen in last almost 3-4 weeks, and today there was a crackdown happened after RBI policy. So there is some worrisome problem or worrisome like situation in Bank Nifty, and maybe sustainable trending below 45,000 may remain more negative toward 44,000 or maybe beyond that also. So negative bias, I would like to comment that I am expecting negativity in Bank Nifty on comparative basis compared to Nifty 50. Now this FMCG. So FMCG is also there was a 1 second. So on this FMCG, after this, there was some expectation from budget for rural economy and all, and there was nothing was happened in budget and all, this interim budget. And after that, this FMCG is falling on more rapidly manner. And maybe this downtrend, I don't know what is the problem. 1 minute. Yes, no. Yes. Now, so this is the FMCG Delhi chart. And if you see here, FMCG Delhi chart, there is a trend line breakout happen. If I draw a trend line here from this level to this level, so there is a trend line already, a trend line breakdown happen on here. This and afterward it is trending below that. Now major resistance is placed, I can say, for that earlier resistance, breakout area that is placed around 54,000 plus minus 500, I can say. Currently 54,700 or a kind of level is there in this FMCG, and 54,000 is a support area. 54,000 in between 54 to 53,000 kind of level. So let's see whether it will take support in that range or not. Maybe most probably from next couple of weeks perspective, or next few trading sessions perspective. Maybe 54,000 followed by 53,000 is a strong support area in that. Otherwise, trend has already deteriorated in this also, this FMCG, and maybe it will remain traded in this kind of situation only. So once again, there is some negative bias in our opinion. It has already breached 50 DMA also. You can see here this black color line is a 50 DMA. It has breached 50 DMA, trending below 50 DMA. Next, maybe 4,000 to 53,100 DMA is placed around in that 53,500, and there is a price cluster also, strong support area from where it has turned out. So that is why I'm expecting some sort of support in the range of 54 to 53,000 kind of range in couple of days or couple of weeks. So otherwise, it is also trending in trending with negative bias along with lower top, lower bottom formation. Momentum has also deteriorated on RSI. MACD has given this negative crossover on daily and weekly charts. So after considering this, this index also may remain traded in a little bit with in downtrend, or I can say sideways with negative bias, or in downtrend, or next at least 3 to 4% kind of correction. Another correction may happen in next few days and weeks. Apart from this FMCG, this Realty index. So Realty index is a clear-cut outperform, I can say, more or less, and it is trending near to its all-time high, and it has tried to retest previous all-time high, which was made on January, it was mid of January, and today's trading, yesterday and today, once again both days it has tried to retest that level, but it failed to cross. And now there is some profit booking happening in the market, especially in financial perspective. But suppose now there is a lot of talk started happening that maybe that RBI's commentary about banking and everything, and this inflation in next target would be inflation and slowdown in inflation. Maybe one can expect a little bit rate cut in this calendar year, and this is the sector which may be the direct beneficiary of rate cut. So that is why we are expecting more or less positive view, and we are maintaining our positive view about this Realty index from long period of time. But now this is the time. Earlier so many times I can say in this Bazaar Pe Charcha only we have shared that it is a 4-digit kind of index, and we are moving toward that. 900 is a recent almost 900 is a recent all-time high, and now it is ready. It may move further also, but now at current juncture, I would not suggest to go aggressive. I am not saying go. I am not saying go negative or go bearish. There is a strictly. I'm means at least from my side. There is a bullish trend, so no bearish trend or no any negativity. But yes, I would suggest at current junctures to follow little bit cautious approach. After considering the current place of market, current placement of market Nifty 50, banking stocks, and the way stocks have started behaving, the way that there is almost more than 40% elevation or increase in this volatility index. Like if you remember earlier, volatility index was comfortably trending around 11. Now it has crossed almost 15 level, and it is around, I think, 15 to 16. If I talk about today's this volatility index, almost 15.77 is the today's closing level, so around 16. So volatility index has increased substantially, 40 to 50%, and it may increase further the way now events are lined up. Today one event passed on this RBI bi-monthly meeting. Now elections and everything is due on chart, so maybe this may increase this volatility, and maybe if I am not wrong, in last 3 months or I can 2 months, I can say 2 months, volatility index has increased almost 40-50%. And I am expecting another 40-50% kind of volatility index increase from current level also. So if I calculate 40-50% increase from current level, so if I take 40 or 50% from 16, so 7 to 8 points volatility index may also increase further. So in such case, I am expecting 22, 23 kind of India VIX volatility index. And in such case, we all are going to face lot of volatility in the market. And that is what I am saying that's why I am saying it is better to follow cautious approach in all indices which are trending into downtrend. Obviously it is in downtrend, so we all are cautious. But the indices which are in confirmed uptrend, so we have to be more cautious in that space, like realty one of the space there is a positivity happening. But I would suggest to follow a positive approach along with extended mm, caution, because if like the volatility index is increasing, so it is going to impact entire market, and maybe this may also turn volatile for time being, maybe. So that is why I would suggest to follow cautious approach. Otherwise trend is positive. If suppose it will cross this current level of 900, I can say maybe it would be ready to move toward 1000 kind of level. But things, who never knows what will happen in next couple of days or next couple of weeks. Otherwise, trend is positive in this volatility, Nifty reality. So now, Yatisa is here. He will discuss few sectors apart from what I have discussed: Nifty, bank, and FMCG and realty.
Okay, thank you, Pawan. So my name is Yatisha. So I will be discussing a few major sectors. The first one is Nifty Energy. So this is a Nifty Energy weekly chart. So if you see here from the last, almost from the last March itself, it's trending in the higher level and making higher low price formation. So there is no such negativity in the Nifty Energy sector. So it's currently at or near in uncharted territory. It's trading at all-time high. So here we are we need to observe the price action. Just go with the trend. So unless until there is no such negativity, continue to hold the energy sectors. So the major support is placed around its 21 DMA. So if you see here, there is a very good bounce back from 21 DMA. And on the momentum side, so it's trending almost sideways from the on the daily chart, and MACD is also positive. So overall here is trend is positive. So continue with the trend until it shows any signs of weakness. And more major sector is Nifty IT. So on the weekly chart also, if you see observe the weekly chart, it's almost touched its previous last year's previous all-time high, that is around 39,300 kind of level. So right now it is trading at the that particular resistance level. So if you see on the momentum side, that also placed almost near to the same, where uh, coming to that level, and there is a slight correction which is happening in the Nifty IT. So what is here, it will be key will be 21 DMA on the downside. So overall trend is positive. Also, if you see small trend lines in the Nifty IT, so that is also pays in around its 21 DMA. So one can continue with this trend. So, however, the major upside resistance is placed around 33,200 kind of level. Sorry, 39,000 kind of level. So that is a key resistance level. So overall trend is positive. So one is a first sign of weaknesses will be showing only once after it closes below its 21 DMA. Okay, and the next sector is Nifty Metal. So here it's on the weekly chart, it's almost gave a very good breakout. So after the breakout, there is a small flag blade pattern breakout also in the weekly chart. So it's trending in the positive range. So overall here, the first sign of weakness will be shown only after it closes below 8,000 level. So which is a previous high level. So also if you see this price range cluster is also that 8,000 level is a key psychological level for Nifty metal. So until then, it will continue to trend on the positive side. However, momentum is deteriorating from the last almost 2 months. So let's see how it goes. One should follow cautious approach in Nifty metal, where if it closes below 8,000 level, so it might test its 50 DMA, that is around 7,700 kind of level. So and right now on the price action side, there is no such weakness in the Nifty metal. And one more sector is Nifty Pharma. So it's trading in the upward channel pattern. So it's from current almost from last June 2023. It's trading in this upward sloping parallel channel. So overall here, price momentum action is positive. So there is no sign of weakness. So we might see it might head towards 19,300 kind of level in the coming days. So major support is placed around 21 DMA as well as this price cluster range. So that is also placed around that level. So 17,700 is a key, 750 is a key level to watch on the downside. So until it's closes below that level, uh, everything is good on the Nifty Pharma. So also next sector from my side is last sector, Nifty Auto. That is also trading at nearly all-time high levels. Okay, nearly all-time high levels. So there is no sign of major weakness in the Nifty auto sector. And from last 2 days, there is some slight profit booking which is happening in the 20,000 level, which is a psychological level in the Nifty auto. However, overall trend is positive right now. So until it's holding above this 18,800, 19,000 level. So that is the price range where it is a major support is placed. So until it's placed around that level, so index likely to continue to maintain its bullish momentum. However, from yeah, short-term perspective, from one week or 2 weeks, it might test this 21 DMA as well as 18,000, 18,000, 19,000 kind of level, which overall market volatility has been increased, and there might be some profit booking which is going to happen in auto. So fresh position one can be avoided in this particular sector. One can follow buy on dip strategy only once comes back towards 19,000, 18,800 kind of level. And that's it from my side. And I will hand over to Pawan. One more sector is there, media.
Okay. So Nifty Media last week there was some news, negative news regarding deal failure of this G and Sony merger, and afterward there was a huge crackdown happened in G Media, G Entertainment, and afterward this index has also fallen sharply in single day. That was the main reason. Now, otherwise, if I exclude this media, G Entertainment, as such, there is no problem in other other components. Stocks like uh, this Network 18, TV 18 broadcast, then Network, Inox, are almost in sideways kind of thing. PVR, Inox, I know. So it is almost are in sideways if I exclude this G Entertainment. So now this index took support around 200-day moving average, this black color line, and trying to recover. But now technically this structure has broken down suddenly. So let's see. Now it will take time to give breakout that earlier we were expecting. And unfortunately, it has not given breakout of 2500, and that is why that situation has changed now. So maybe things will emerge further. Don't know. But meanwhile, it is not looking that much lucrative or that much effective at current junction. But yes, one can focus stock specific actions in this space. Few stocks which are really showing strength and may remain positive in coming days. So instead of focusing now at media index at current level, I would suggest to focus on individual index. Like DEN is looking comparatively good compared to other media stocks. Network 18 and Broadcast 18 is looking a little bit positive compared to other media stocks. So my opinion is to focus on stock specific actions now instead of focusing on this media index. So I think we have discussed almost all the major indices. Now
Yes.
let's move toward query section. So
First one is ITC and Nestle.
yes, so ITC now I think is trending below 200 DMA. It has reached recent support and reached around 425 kind of level. So it is now in clear-cut uptrend. If person is asking whether we should hold or
Exit.
exit, so obviously exit price was when it has reached 200 DMA. That was the appropriate exit price around 450, 440 kind of level. But yes, if someone wants to exit, so one can exit now currently. But see this if you see almost from the longer period, or maybe from the last 10 years, there was a no performance in this index in this stock. But suddenly there was a huge performance happen, and now there is some crackdown happen in this. So maybe it will take some time to consolidate, form another round of base and all for fresh uptrend. And maybe in this current consolidation, current downtrend in this particular stock and in FMCG, I'm not denying it may fall another 4 or 5%. So actions up taking actions, it's purely up to a trader. In my opinion, when it has breached this black color line, that is 200 DMA, that was the best price to exit from this index either, or when it has breached the upward sloping trend line. If I draw a upward sloping trend line, so that was also a best price to exit from this stock. So maybe not looking that much attractive at current juncture, this ITC. Now next one is
Next one is
Nestle.
Nestle.
Yes. So Nestle, same kind of situation is emerging in this stock also, because FMCG index is showing negativity. So this Nestle is also showing negativity from the last 3 4 weeks. In the month of January, there was a shooting star, or I can say pattern formation on weekly chart happened, and then the following there was some from the last 4 weeks it is showing negativity. So maybe this current ongoing trend may extend further. Today in today's trading session only it has reached 100 DMA also, and now maybe it is ready to move toward 200 DMA also. 200 DMA is currently placed almost 2300, 2330 kind of level. So once again another 100 rupees fall cannot be denied in this stock, and the structure has little bit turned positive. I am expecting, or we are expecting, some sideways with negative bias kind of actions may remain in this particular stock. So obviously, if someone wants to exit or switch from this level for timing, so one can do accordingly.
There is a general query about defense sector. So there is some buying interest in defense sector today. So what do you think of this defense sector overall?
So overall defense sector is positive only, but yes, only problem is that if someone wants to chase the rally at current juncture, so it is very difficult and it is very dangerous to chase the rally. Otherwise, structure is positive, no doubt at all. If someone is holding from lower level, so it is a strong recommendation to hold unless and until it is not breaching decisive any key moving average or any price structure, or there is momentum deterioration. Otherwise, if but at the same time, if someone is interested to take fresh position, so it is very difficult to comment, because chasing such kind of rally sometimes turn more dangerous, because there is a huge volatility increase in market sentiment also. So any particular day, suppose if you buy today and tomorrow it may crack down on 10% and you will exit, and next day it will once again recover 5%. So such type of we all should be ready to face such kind of market in next at least in next 2 to 3 months. So that is why it is very difficult to take fresh positions. But yes, if someone is holding, one can remain holding with stop loss, appropriate stop loss. one can keep stop loss like any moving average on any price structure low or any pattern formation, price pattern formation, or any key momentum breakdown like RSI or MACD. So according one can manage their stop loss. But if someone will ask me to take fresh position, so I would suggest no, it is better to avoid at current juncture to taking fresh position.
So let me take a few queries.
Yes.
First one is Eicher.
Eicher Motor.
Yes.
Yes, please.
So Eicher Motor, it was trading in a consolidation zone in this particular range. So let me take a few broader perspective. So it is trading in this price range. So it's currently recently it has been breached that major key support area and touched this 200 weekly moving average, and there is a good bounce back in the last week. So right now it's once again it's showing some consolidation. So the range is over here is from 4,000 to 4,000 to 4033. That is a very good resistance range for in the for the Eicher motor. So once it breaks out that level, once it breaks out this 1470 kind of level, then there will be a very good buying interest we can see. So right now it might test that 100 DMA now. So one can wait for the better opportunity on the upside. So better to wait till 1100 200 kind of level. Next one is Eclerx. So here after the breakout, there is a very good breakout from the flat base pattern. So right now it's trading sideways. First sign is over here is it breached its 21 DMA today, and last 3-4 days there is a huge selling volume is also coming. So one can should those are bought in the in this particular price range. One can should strictly follow the price range stop loss that is around this price range of 2450 kind of level. So once it breaks below this level, one should clearly there is a sell signal for E-class solution. So on the upside, this price range that is 2770 780 kind of level is a key resistance level for E-class. So once it breaks out about that level, once again bullish moment will continue. But right now it's showing some kind of weakness, so it might head towards this stop loss region somewhere around 2450 kind of level. So that is a stop loss area for this particular stock. And the next one is Nazara. So stock has been, I think it's trading in the sideways. Yes. Okay, even this stock also it's given a very good breakout level. So early breakout level was something around 890 kind of level. So after that breakout, it has been retested that breakout and it's testing its 100 DMA. So if you observe the last couple of times, it has been tested that 100 DMA, and there is a good bounce back from that level. However, volume is on the selling volume is slightly lower, which is a very good sign. So here one can continue to hold this particular stock with the stricter stop loss around its closing below its swing low, that is around 820 kind of level. So the next after that 820, the next level major support is placed around there's around 750 760 kind of level. So that is a major support level for Nazara Tech. So until then, it's likely to continue this sideways trend for this particular stock. Next one is REC. So it's trading at nearly all-time high levels, making after the once again it's broke out from flat base pattern. But chasing this kind of stock at this particular market, it's kind of risky. So those who are one should hold this those who are buying from this currently all-time high level stocks, one should follow strict stop loss mechanics where 21 DMA or 50 DMA is a key stop loss area for this particular stock. But buying at current junction, one can avoid this stock right now.
I am taking LT and then
Okay.
Nokri. So first LT.
Okay.
So Larsen and Toubro, it has already breached 50 DMA, upward sloping trend line. There is a strong this momentum deterioration on daily and weekly chart, especially on RSI. MACD is also showing negativity on daily chart. And if I talk about weekly MACD, so weekly MACD is also given crackdown or negative crossover, but its trajectory is positive, but there is a negative crossover on weekly MACD. So after considering all this, I can say this LNT is also showing some negativity for time being, and maybe next round of support is placed around level of 3200. I can say that, which is almost 100 DMA. 3200 is a level where there is a gap up area also. Gap up area is also placed in the range of 3200. 100 DMA is also placed in 3200. So first range of support is placed around 3200, followed by 3100, I can say. So maybe let's wait for this stock get settled down in the range of 3200 to 3100. Then only we can take any actions if suppose after some base formation. But meanwhile, some profit booking is happening in this stock, and this profit booking may extend another 5-7%. I'm not denying for that in coming days in LNT, Larsen and Toubro. Next, Naukri. If
Okay.
I talk about Naukri, so Naukri is in confirmed uptrend. It is a strong, it is behaving strongly on all time frame chart. Even there is a pivot breakout also happened on daily chart, and the trend is positive. Among this entire IT pack, IT index is little bit looking quite attractive at current juncture. It is trying to retest previous all-time high of approximately almost 39,000, even though it is just shy of 5-700 points to 39,000 level, and now currently placed around 37,800, 37,900. So almost 1,000 below previous all-time high, I can say. But IT index placement is quite positive. Weekly chart is looking positive, monthly chart is looking positive, and daily chart is also looking positive. And likewise, Naukri is also looking positive. So I can say if someone is holding this stock, so remain invested. Maybe it will give good rally, or maybe one can expect more uptrend, or I can say kind of 6,000 kind of levels in coming days in this Naukri stock.
I'll continue with the power Mech.
Okay.
So I think this is a portfolio stock. Oh, yes. Okay. So there is a very good breakout from consolidation range, but after that range, it's trading in the tight range. So there is no sign of weakness right now. So continue to hold this particular stock until it's showing any kind of weakness. So MarketSmith India subscriber can follow MarketSmith India for this particular stock. And the next one is JSW Energy. So today I think it has given a okay. Oh, not this one. Okay. So it has trading in the sideways range after the breakout from cup base pattern. So trending positively and making some tight area from the last 1-2 weeks. So continue to ride this trend. But those who are taking fresh position, one can avoid this stock right now, which is almost rallied from the pivot level. So can avoid this stock on the higher side. So those who are holding this stock, one can keep a stop loss below its 50 DMA or 21 DMA. Those who are conservative approach, so one can keep a 50 DMA as a stop loss and continue this trend. Fundamentally strong is stock, and might gain some more.
Please, one question is that please share your views on Karma holding. So we are really sorry for this stock because we are not
We don't
tracking this
track
stock,
this.
so we can't comment. Another one is can I buy Indian Overseas Bank, Bank of Maharashtra? This is a YouTube question. So all the PSU stocks, even today also entire this banking stock was down, BFSI stock was down, but this PSU are really showing good show in today's trading session also. So all PSUs are well moving, but buying at current juncture is little bit risky because stop loss is not appropriate. Otherwise, from the long period of time, we are bullish on this PSU space, PSU banking space especially, and then this entire public sector enterprises. And I'm not saying it may turn, it is not, it will not give more bullish trend. Maybe it may remain bullish in coming days also, but only concern is taking position or fresh position at current juncture is after considering risk reward is little bit difficult. So it is better to wait and follow wait and watch policy. Maybe some, if there is some appropriate risk reward is there, then one can take entry. Or if you are able to manage your risk, then also you can buy it. There is no doubt. Maybe this current ongoing trend or current outperforming trend may remain in continuation in coming days and coming weeks or coming few months also. Maybe in this particular calendar year or maybe next 3 to 4 month year at least, I can say this all this entire PSU banking stocks are looking quite positive. But only concern is after considering risk reward is taking fresh position is quite difficult for me actually. Otherwise, trend is positive.
Okay.
Cochin ship, it is right time to buy. So Cochin Shipyard, if I talk about Cochin,
It's a nearly
yes,
all-time
it's
high levels.
positive. It's all-time high. Yes. So once again, same thing actually. Like the way this entire PSU has moved. Managing the stop loss is only problem. But if someone is really a momentum chaser and someone is really interested to chase the momentum and able to manage the risk, so obviously one can buy. Otherwise, as such, there is no negativity in any almost major PSU stocks, including this Cochin Shipyard.
So shall I take few queries?
One more question I would like to take
Okay.
together. How railway sector should be, same situation is happening in railway stocks also. But he is asking specific about Tarmat and Texmaco. So I think Tarmat is more or less in sideways and one of the underperforming kind of stock. So if you are holding, as such, there is no negativity. Hold this stock unless and until it is trending above 85. There is no sign of any problem. But relatively, this Tarmat is a side underperforming stock. Now next is Texmaco. So Texrail is in clear-cut uptrend, but in this from the past few days, it is showing some profit booking. And in today's trading session only, it has approached to 21 days exponential moving average. So one can draw a upward sloping trend line from the low of 26th October, and suppose it will breach this upward sloping trend line and remain trending below that, then one can take exit position from that. Otherwise, one can remain invested in this stock. After considering this momentum, actually, I can say, especially on daily chart, I'm expecting some sort of sideways kind of actions in coming days and coming weeks in Texrail. Sure, Yatisa, please continue.
Okay. So first one is the BEL. So here also it's trading at all-time high levels. It's trading fundamentally strong stock. So one more defense sector stock. So it's trading at all-time high level. So fresh position at current juncture one can avoid clearly. So first thing is stop loss, which is quite it will be much more. It's one-sided rally from the last December and January. So after that, there is a sideways range consolidation is happening. So overall trend is positive. Those who are bought much earlier will continue to hold this stock with stop loss below its 50 DMA. But the fresh position can be avoided. Next one is Paras Defense. So it's making a base. It's trading at near pivot level. So once it breaks out above this 820, 816 kind of level, so we might see some bullishness will be kicking in the Paras defense. However, EPS is due tomorrow, I guess. So one can keep a close watch on this stock if the earnings is strong. So it might give a breakout level, breakout, and this bullish trend likely to continue. So we might see somewhere around 950, 970 kind of level in the past defense. Next one is Kaynes technology. So it's after the super rally in 2023. It's from last October. It's trading in the sideways range. However, making holding its making its higher high, higher low price structure. So overall here is making sideways range. So breakout above 3000 will be fresh entry can be taken. But however, stop loss would be somewhere around this swing low, that is around 2700, below anything below 2700, and also 50 DM is placed around 2640 kind of level. So that is a range. 2640 50 to 2700 is a key support for this particular stock. Next one is
There is one question about from YouTube about
okay.
Yes Bank.
Okay.
So Yes Bank currently it is a hot stock, I can say. There are a lot of talk happening in the street about Yes Bank. Even if I talk about personally myself, so there I am getting at least 3 to 4 messages and call from my almost circle, friend circle, and relative and unknown person about Yes Bank, that what to do Yes Bank, and it is quite interesting. Today it has crossed 30 rupees, but there was a news also I think happened from that SBI is planning to sell or sell off or dispose of almost 5,000 crore shares. So maybe structure is positive, trend is positive. Maybe it may sustainable trending about 30 rupees now. Technically, if I talk about, so sustainable trending about 30 rupees, maybe it would be ready to move toward 40 rupees. Only point of concern is this current SBI news that sell of 5,000 crore rupees. So maybe it may turn little bit volatile for time being. Otherwise, trend is clear cut, strong momentum is strong. This particular stock is showing such kind of strong after a long period of time, almost 5-7 years of period of time. So maybe it may move toward 40 rupees. I'm not denying for that, subject to holding about 30 rupees. Suppose it will breach, it will not hold 30 rupees and remain traded below 30, then may remain a little bit volatile. Otherwise, holding about 30 rupees may be ready to move toward 40 rupees. Once again, it is not a recommendation. We generally do not give such kind of recommendation. But yes, currently, technically, it looks like that. Maybe it may move toward 40 rupees kind of. Yes,
Next one is BPCL. So I think it's a same thing like one-sided rally. It's trading in near the almost breakout from the flat base pattern. It's trading at nearly high levels. So at current juncture, those who are bought much earlier continue to hold this stock. Continue to hold this stock until it's showing any signs of weakness. So right now there is no signs of weakness. But for the fresh entry, one can be clearly avoid this stock right now. Next one is Inox Wind. So here there was a small, after this there is a small correction. There is a small symmetrical triangle pattern over here, and after that it's trending higher. But right now it's trading at a higher level, and there is some signs of weakness coming from the higher side where profit booking is happening. And one can also see VPS is due tomorrow. So those who are bought at the much lower level didn't need not to worry. But those who are bought somewhere here in the uh, private breakout, so one can keep a stop loss below that breakout level, that is around 470 kind of level. So until it's showing closes below that level, so there is no signs of weakness. Next one is Midhani and CDSL. So Mr. Nigam, after the breakout level, it's retested that breakout level, and today there is a slight bounce back. So uh, those who are conservative investor can see this today's low or yesterday's low as a swing low as a stop loss, or those who can hold the stock for this for the longer time, one can keep a stop loss below this price range as well as 50 DMA. So that is a major support level for Midhani. So until then, it's one can continue to hold this stock. Those who are didn't buy also, one can look for this particular stock in coming days. Also, one has to be cautious on earnings, which is due on tomorrow. So let us see how the number comes and then take call accordingly. Next one is CDSL. So there is a double bottom brace breakout, and also there is a advance buy signal which has given somewhere around in the last week actually. So after that, it's showing it's trending positive. So there is no signs of weakness, and one can keep a stop loss below this 1730 kind of level. So once it closes below, one can draw a trend line from the low of November 2023 to the low of recent low of January. So that will be the good stop loss for this particular stock, and continue this trend. The fundamentally strong stock, and this is a monopoly stock. So right now there is no signs of weakness. So conservative investors can take 50 DMA as a stop loss and ride this rally for this for the longer term perspective. Next one is Tata Tech. So after the IPO listing, stock has been came under some profit booking, and day before on February 6th especially, it has given a some very good bounce back. However, if you observe clearly, 21 DMA is acting as a resistance for this particular stock. So once it closes above this 21 DMA, we can see some pullback which is going to happen in Tata Technology. But right now, fresh position can be avoided only once if it closes above this 21 DMA, one can take up a fresh position in this particular stock. So and there is no stop loss for this IPO based pattern. So one can keep a swing low of 1070 kind of for the stop loss for Tata Tech. Next one is Varroc Engineering from YouTube. So overall fundament technically it's it has given a double bottom breakout. So after that breakout, we have seen today especially there is a slightly profit booking which is happening, but it's holding that breakout level. If you draw a trend line from this low to this, so that will come around this particular 50 DMA. So today's close will be crucial. If it closes below its 50 DMA, then we might see some more profit booking and might see around 900 515 kind of level. So if it give a good bounce back from this low, which is very good, but right now it's kind of a dicey situation. So if it doesn't hold this 50 DMA, so we might see some more profit booking. Next one is Root Mobile. So this stock has been trading sideways from in the larger time frame also. So it's almost from last July, last 6 months, it's trading in the sideways range. So initially there was a sign of breakout in the January, but after that it has been failed at level, and once again it moved to the consolidation range. So one can keep a close watch on this particular stock. Once it closes above this 620, 630 kind of level, one can keep a close watch on this particular stock, and buy this with the swing low as a keep as swing low as a stop loss, which is 100 rupees from the buy point. Next one is Pawan, will you take
What's the
HDFC Bank?
sorry?
HDFC Bank and Axis Bank.
Yes, I'm taking. So, Bank Nifty is relatively showing underperformance, negative bias, but it is still holding above 200 DMA, I can say. But yes, 200 DMA is currently placed around 200 EMA is placed around 44,600 kind of level, and 200 DMA is placed around 1 minute. Let me check. 200 DMA is placed around 44,800. So let's take, I think, level of 44,500. And current rate is Nifty 50 is 45,100. So that is why when I was commenting about this Nifty 50 banking and all, so I have suggested level of this 44,000 is a support area, more or less. But suppose it will breach that area, that level decisively with volume and everything, so maybe it will extend downtrend. So one point is this support is there around 44,000 roughly, plus minus 500. Now, if I talk about SDFC, so FDFC is one of the worst performing stock in recent time period in last couple of months among this entire BFSI or financial services or banking stock, because it is in clear cut downtrend. It has breached 200 DMA. It has breached 200 week moving average also, and now comfortably trending below 200 week moving average, not 200 day, 200 week moving average. 200 week moving average is 1450, and currently stock is around 1400. So this that is why I am saying, suppose it will remain traded below 1400 I can say, or 1450 kind of. So maybe there is one of the more fall may happen in SDFC Bank, and maybe a stock may reach toward 1300 followed by 1270 kind of levels. So next round, suppose falling below this, with the way it is falling, maybe it may move further toward or may fall another 8 to 10% fall may happen in SDFC Bank. But suppose if you will retest 1450, so maybe some bounce back cannot be denied. But meanwhile, the way overall structure has emerged in this entire pack, maybe negativity will be there, and it may lost another 8 to 10% kind of levels in coming days and coming weeks in SDFC Bank. But once again, suppose it will retest 1450, then scenario will change. But meanwhile, currently it is in negative SDFC. If I talk about this Kotak, na, Yadisa?
Not Kotak, this Axis Bank.
Axis Bank. Axis Bank. So Axis Bank is relatively showing positive compared to SDFC Bank. This Axis Bank is comfortably, I can say, holding about 200 DMA, but today it has reached 100 DMA also. So there is a negativity in Axis Bank also. If you check the Kotak Bank, if you check the ICICI Bank also, even disclaimer is that we are already, I think, holding in our TraderSmith portfolio, but maybe tomorrow if things will not turn positive, so maybe we will exit and book the loss of around, I think, 4% kind of level. But there is a negativity. But yes, I maybe current negativity will take another few days to turn or get settled down in this entire banking stocks. But any particular stock, especially from private banking space, is showing negativity. And among that, stocks like HDFC Bank and Kotak Bank is more negative compared to Axis Bank and compared to this ICICI Bank. But yes, overall trend is negative in this entire private space.
Next one is
I'm
AC.
sorry,
Action Construction.
ACE I'm taking, yes. Action Construction. Yesterday there was a
earnings.
We think another round of bullish trend, and today also stock has gained around 3-4%, and it has closed around more than 2% on positive side. So it is in uncharted trajectory. If someone is holding, chase the rally, just follow the appropriate rally or stop loss. But if someone is interested to take fresh position, I would clearly suggest please do not, because it is very difficult to manage the things in this particular stock. Any particular day, the stock will suppose sudden face some profit booking at higher level. So it will fall at least 8 to 10% kind of level. Then in such case, there is only one option will be there, that exit after booking the loss. That is why I'm saying if someone is holding and sitting on handsome gain, so it is better to trial the rally or trial the stop loss and remain invested in stock. But for fresh position, please do not take.
Okay, there is a standard query that how to understand the pivot price in MarketSmith India. So,
Please answer.
yeah, I will explain it. So basically, those who are new or those who are try to understand the market price action, where if you see there is a basis is happening over here. For example, this is AC. For any particular stock, which is cup based and flat based pattern is happening. If you see on the right side of the base, there is a if you click hold the mouse, you will see the pivot price, which is around 895 kind of level. So the ideal William O'Neill suggests that from the buy pivot price plus or minus 5% you can take a position. Ideally plus, where from the 895 plus 5%. So that is a price range you can buy this particular stock and wait for the stop loss of below 8% or any key moving average. So once it once you buy in this particular range, right, hold this stock until it's showing any kind of weakness or any either direction of the move. So if it, in this case action construction, it is almost gained almost 28% from the pivot level. So which is a very good move. Those who can book partial, this is the green line where one can book the partial profit, or one can conservative investors can take a full profit and ride this stock for the longer until it's showing any kind of weakness. So that is the ideal buy point scenario for this any kind of pivot level. So you can also take this learning articles. If you can check in the learning articles. So there on the, also if you go to MarketSmith India website YouTube channel, so you'll also get the all the learning articles over there. Next one is
One query from Vimal Srivastava. He is asking about advice some sector stocks for tomorrow and coming weeks. For obviously for our advice and recommendation, we can follow our model portfolio, that is a TraderSmith for short-term trading and investment, and this MarketSmith for little bit higher duration of time. But yes, if this is just a general observation that I would, as you asked, that I would like to reply your question. You can focus our model portfolio stocks first thing. Apart from that, currently few stocks which are in our watch list, that today we are already holding, that NIACL. We are already sitting on more than 10% gain in our portfolio. So one can focus on that. Maybe some more upside is there. Then one can focus on this. Which bank is we are holding? Small finance, Utkarsh.
Utkarsh.
Utkarsh Small Finance, that is also looking quite attractive. There is one more stock which are in which is in our watch list, that is Suryoday. Suryoday Small Finance, that is also looking attractive. Den is also we are holding. It is also showing some strength, but don't know. Suppose it will cross 66 rupees, then maybe there will be more positivity in Den. And then PSU stocks which are showing good strength, one can focus in that. Then apart from few IT stocks like Emphasis, one can focus. Naukri, one can focus. So all these stocks is looking attractive at current juncture. But once again, this all these stocks are not recommendation. For recommendation, follow our model portfolio. This is just general observation, and in response to your question, I am just sharing with you. But once again, not a recommendation.
Next one is TVS Motor. So it's almost 540. So we'll try to quickly reply your queries, and we'll wind up the session in 5-10 minutes. So right now it's after this tremendous rally, it's stock has been trading in the sideways range. So fresh entry one can be avoided, but still those who want to take the small kind of risk, one can take initiate at buy signal around above around its 22,000 level to 2000 sorry 2000, yes, 2000 level, below about 2000 level one can keep a buy signal, and with the swing low as a stop loss. So for this particular stock, next one is Hudco and SJVN. So both stocks is trading at all-time high. So please avoid this stock right now, which is clearly stop loss will be won't be possible in this particular stock, and both even in SJVN. So those who are bought much earlier continue to hold until it's showing any kind of weakness.
One last question, Tisha, that I
Yeah.
would like to take, then we will wrap up the session.
Okay.
In next couple of minutes. That one person is asking about how to use AlgoSmith. Hitesh is asking. So Hitesh, this is not a right platform over here. We are gathered to discuss about market and stocks and current placement. But yes, definitely I will request our marketing team, Raju and team members, that please connect Mr. Hitesh Shah to share
Hitesh.
that how to, or discuss with him that how to use AlgoSmith. Hitesh ji, you can write us also. But definitely we have our team will take care of your query, and they will connect you and guide you that how to use TraderSmith. So let's take Atisha last any last query of the day.
Last
Then
query, one is NHPC,
yes.
and one more is
So let's take NHPC and then wrap up.
OFSS.
OFSS. Okay. So NHPC in uncharted trajectory. There is a huge, I can say, from gain happened in last couple of months. It has doubled in last couple of months only, and that is why. And from the last 2-3 days, after hitting almost 115, 116, there is some volatility. So once again, I would not suggest to take fresh position, but trail your stop loss, whomsoever is holding. And then OFSS. OFSS is the stock from IT space, which is a clear-cut outperforming stock. Currently, from the last few days, it is in consolidation zone. So I can say if someone is interested to take fresh position. So only concern is that stop loss. Stop loss is placed almost 6,300 kind of level, which is currently 14-15%. Otherwise, stock is looking quite attractive. IT index is also looking comparatively attractive, subject to crossing and holding above 39,000. And this OFSS is in clear in this outperforming space. So maybe if someone is able to manage, one can consider as a bullish trend stock, OFSS.
Okay.
So I think it's 5:45. So
There
let's
is
wrap up this.
one last query, PC
Yes.
Jewelers.
PC Jewelers.
Yes. We don't
So
track this
PC,
stock. Sorry.
we
Yeah.
generally we do not capture this
Yes.
stock now, so we
Yes.
can't.
Sorry, we don't track
Yes,
this
no
stock.
worries, no worries. So let's wrap up the session. It's 5:45. So once again, thanks all of you for joining the session. Only advice today that now volatility is increasing and one can face more volatility. Not one can, we all are going to face more and more volatility in next few weeks. Unless and until this result outcome will happen, general election result. So follow cautious approach. That is the only way. Market there is no prevalent negativity in the market, but yes, some extra cautions are needed at current juncture. That is the advice from our side. So thanks for joining the session. Stay tuned with us in next Bazaar Pe Charcha and Stock Darbar prevails. We write various reports, so follow us, read our reports. We really do hard work to write reports and everything. So we will get updated about market. Thank you. Have a safe trading journey in coming days, coming weeks, and coming years.
Thank you.
Thank you. Mahalakshmi, enter session, please.
Still it is going on.
Leading
Can you enter session?
almost breakout from the flat wave pattern. It's leading